What exactly is the new tax law regarding donations? So it sounds like this is coming from the nonprofit sector. My understanding is, unless you itemize on a personal return, the standard deduction is too high for an average Joe to donate and it make a difference for that return. True? What about for businesses? Yes, true. So your understanding matches my understanding. Even before the new tax laws took effect in the United States for 2018, what was in effect prior was the United States gives a standard deduction to every taxpayer, and if your itemized deductions exceed that, well, take the itemized deductions. Go ahead and itemize, and your itemizing includes charitable contributions. But if you don't want to bother itemizing, or if you stack them all up and your standard deduction is still higher, don't bother listing them in the return. Just take the standard deduction, toss your receipts, and be done with it. The major change that took place in 2018 tax law is that the standard deduction was doubled. So you have to have a boatload more itemized deductions for it to be even worthwhile. So for anybody who would have previously exceeded the standard deduction, but will not exceed the new standard deduction, people who have itemized their entire lives are suddenly going to realize it's not worth it anymore. I'm going to do better. I'm going to have a lower tax liability with the new standard deduction. So there was a lot, once that tax law passed, and even before it passed, there was a lot of hub in the American nonprofit community. Are people going to continue to donate if they can't get the deduction, if it doesn't do them any extra good, if they're just going to go to standard? I get that. So it really is a pretty good lead-in to your what about businesses question. So first of all, remember that you're in a nonprofit organization, not in public practice as a CPA. So stop short of giving any of your donors tax advice, but it is good, and refer them to their own CPA. And if they don't have one, let me know, because I know a lot of people across the country. But it is good to be aware of this because it could cause a change in your strategy. Bear in mind that according to official studies or surveys, tax deductibility is pretty low on the list of why donors donate. On the other hand, I also feel a little bit of skepticism because why a donor says they donate versus why they really donate aren't necessarily the same thing. So with that in mind, the deductibility for organizations, for companies who are making corporate contributions, don't even start to advise them because the rules for companies have a lot of variables. Are they a pass-through entity? Are they not a pass-through entity? That's just one variable, and unless you're going to sit and grill, well, are you an S Corp, a C Corp, or an LLC? Unless you're going to sit and have those conversations, which I really don't recommend, you're really not going to know how deductible a corporate contribution is. To what extent a corporate donor can deduct that. One thing that you might want to consider is corporate sponsorship, which is part of their advertising budget. Just make sure that your nonprofit is really giving the corporation some publicity. If it's a stand at the annual gala, if it's a big poster with their logos all over it, and their logos all over your organizational tote bag, if it's real advertising, then the deductibility doesn't come into question because it comes from their advertising budget and is not really deemed a charitable contribution. So you might want to beef up your sponsorship opportunities and not sweat so much the corporate donations.